Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. There are three major influences on the movement of stock price, according to a study by Ben E. King. 80% of your investment success will be due to the movement of the sector and the market. Now you can view a weekly snapshot image of the market and the sectors. This is a snapshot from April 9th, 2021. The red arrow, pointing towards the 2 o'clock position, represents the market. The rectangles each represent a mini-sector. They are color-coded to the sector they represent. Healthcare mini-sectors are in red, technology is dark blue, financials are green, media communications are brown, industrials are purple, consumer discretionary are light blue, and all the others are gray. I've been charting this movement since 1998 over more than 25 cycles using this exact mix of 40 mini-sectors. The key to understanding the movement and what makes the cycle predictable are the psychological stages that investors experience as they go through complete market cycles. It rarely changes. These stages are on the outside border of the circle. The placement of the sectors and the market are completely data-driven. The interpretation of what to expect next is from my experience of going through the cycle dozens of times. I'm not always perfect, but the beauty of the circle is that it corrects me quickly when I don't get my prediction absolutely correct. I've learned it's okay to be wrong now and then, but absolutely abysmal to stay wrong when the data says otherwise. We had quite the week this week in sector movement. In healthcare crossed from the bull side to the bear side. Drugs and biomedicals both declined. In media and communications, telephones crossed from the bull side to the bear side. Media advanced slightly, and internets declined. In technology, semis got crushed. Software went down substantially. Electronics and computers both crossed from the bull side to the bear side. In consumer discretionary this week, all the sectors declined. Leisure, autos, gaming, restaurants, retail, and household products all declined, and they're all on the bear side already. In financials declined. Savings and loans declined. Real estate declined, and insurance declined. In industrials this week, aerospace and defense declined. Steel gained on price hikes. Metals declined. Chemicals declined. Building products crossed from the bull side to the bear side. And machinery and tools declined, and waste management declined. In all the other sectors, precious metals rose. Electric utilities declined. Protection crossed from the bull side to the bear side. Business products declined. Forest products declined. Transports declined. Textiles crossed from the bull side to the bear side. Gas utilities rose. Oils and oil services both dropped. And food advanced slightly. This week we had 5 sectors advancing. 33 sectors declined. 2 were unchanged, and 7 sectors crossed from the bull side to the bear side. 300 in stocks went from buys to sells. On NASDAQ, 54.4% of all the stocks are now on sell signals, slightly higher on the New York Exchange and in the S&P. 6 weeks ago, I said we were about to start the 4 o'clock loop, and we finally got that underway a couple of weeks ago. And we had a dozen sectors participate in it 2 weeks ago. This last week we had 33 sectors declining, and we're not halfway done with the 4 o'clock downside loop yet. Um, I expect to see Dow down 1,000 points to 2,000 points either this week or next week. I have no idea of knowing how soon it will occur, but it will occur. As you saw on the previous chart, over half the sectors have started the 4 o'clock loop now. 7 more sectors moved from the bull side of the chart to the bear side this past week. The S&P and Dow Jones Industrial Average may be close to new highs, but just shy of half of all stocks are now on sell signals. The bears will prevail in the short term during the 4 o'clock loop. They always do. If you want to protect your portfolio value during the downturn, buy one SPiDeR put contract for every 20,000 of the value of your portfolio. It'll get you through the downturn nearly unscathed, including taxes due on the profits on the puts. Buy just out of the money puts with an August expiration. For example, August expiration put options at a strike price between 390 and 410. Paid subscriptions are now available. They're $15 a month on a month-to-month basis. On an annual basis, it's $144 or $12 per month. 90-day free trial and no credit card is required. Thanks for watching my Slay the SPiDeR video this week. For those of you who are new, so far this year we've gone through about 8 of the events on the Slay the SPiDeR circle, and I called all 8 of them correctly. And for those of you who watched everything since January, you're welcome. See you next week. Thanks.